Hello guys, let me just check the audio. Yes, let's just start from the daily time frame. First, I'm going to mark the previous day's high, basically the high of the previous daily candle and the low of the previous daily candle. Yesterday, we got the closing below the previous week's high. This was the high on the 27th June, Friday. This was Monday, and we got a closing below the previous week low on Monday. Plus, we have a low of Friday still intact. We have tagged the low of Friday. You see this on the electronic trading hours, but there's still a chance that we might retest those levels again, which becomes relevant for now. So I'm going to mark this as a RL relevant low for now. Next thing, we are going to go to the 1 hour time frame on the electronic trading hours. We got a single candle close below the moving average on the hourly time frame. So this as a whole become the first leg, and we can easily get the second leg back to the all-time highs. The all-time highs are going to mark the all-time high here, 22,239, 22,200 point three. So mark this as 9, 4. We have 6 minutes till the open all-time high. Written on lights. This first leg. This is the first leg. We've gotten the second leg, would have used this as a first leg. Then this is the two standard deviation of that portion. Okay, so let's get back. Hmm. So we got a closing on the hourly time frame below the 20 period moving average. Move to the 5 minutes. This, this. 547.85, 548, 85, 547.61. Okay, gapping down from the yesterday's close. I'm gonna mark the gap with this color, drag it to 11 o'clock. What are the other levels which are really relevant today? So those levels, 541.62, 541.62. First, we have the previous day lows and the Friday low. So these two levels are important. This can be like a scalp and a swing, probable swing trade to 541. And on the electronic trading hours, let me just delete all of this. One and a half minutes left till the market is going to open. Four 471, 454, 471, 471, 454. Four, 486, 400. Market is open. 400. not allowed to trade for the first 3 bars of the day. First 3 bars of 5 minutes, so that makes it a 15 minutes. The first 15 minutes, and I like to think of the first 15 minutes as the initial range. 369 is also important. Yeah, 369. So the market is clearly more bearish than it's bullish. But if we broke out of this zone after the 15 minutes, I would also take a scalp regardless of the bias I have. Doesn't really matter. But still, on the read, it's more bearish than it's bullish. We might come back to this point to retest this. The first 5 minutes is still has 2 minutes to it. We might retest this point, retest this moving average, and this black box. Suppose if we get a closing above or this, the first 15 minutes range is something like this. It's something like this. Then it's more good for the bulls. If we move above this point and stayed above this point, then the 15 minutes breaks, then it's more favorable for the bulls. Otherwise, it's a low probability bullish trade. Even if I get it, I'll still take it, but considering the low probability, I would take a lower lot size. Probably 1/5 of my original position. Then I can trade this inefficiencies towards the upside on a 15 minutes. Then this becomes relevant. We have a gap. Yeah, we have a gap around this point, right? This is a gap 4 hours. For the context, we are still within the range of yesterday's opening, the drop we got. So that was the candle. We are still within that candle's range, but it's still more bearish on the 4 hours than bullish as of now. This low is perfectly equal, so that's gonna get tagged again, most likely. The first 5 minutes is closed on the hourly time frame. We took out the high of the previous hour. We still have a gap here. That's also a gap. So within the next 24 minutes, if we get a closing above on the hourly time frame to this above this point, which is like right here, above this 474, that would make it more neutral and a range bound market. 15 minutes. It's clearly, this 15 minutes is the reason we are going up. I'm still not in a trade. I'm waiting for the third 15, 5 minutes candle to close. That would clear a lot of things. We're still on the regular trading hours below the hourly moving average. That makes it more generally more bullish. But still we have 53 minutes or 52 minutes left to close above. So we still got time. We are testing that red line. We are yet to test this moving average. These are the things which are against the bulls. So bulls have to do much better than this to become an always in long or a bullish trade. Trying to close this gap. We have probably closed the gap on the 4 hours time frame, the fair value gap on the 4 hours. We are testing the moving average on the 5 minutes. Is it possible that we are making this expanding triangle? Don't know. Probably not. Probably, but still, we'll get the answer if we move to this point, come below the previous day's low, retest this point, and bounce off this level. Then it can be the case from this point to that point. If the first 15 minutes is about to close. First 15 minutes closed. Still, it's below the moving average, which it makes it not favorable for the bulls. Have tagged that point, retesting that level. this white black box. So one times my risk is 30. This is the first 15 minutes. One times my risk is here. Risking 28 to make 37. Still, I'm with one fifth of my lot size because this is a low probability criteria. I need a closing above the moving average for me to basically add into my longs. Let's see if we can get a closing above the previous candle high on the hourly time frame. If we close above this high, that is the 491 level or 474 level, these are the two levels which I'm generally most interested in if we get a closing or we stay above for the next 11 minutes. Not a very good closing above the moving average. We're retesting the initial range. One third of the 15 minutes is closed. This is the first part of the 15, second and third part. We can close this gap on the hourly 537 or 529. But we need to stay above the moving average. Back inside the Asian range. Six minutes till the first 30 minutes is going to close. This can be a failed bear flag on the 1 minute time frame. Making a bear flag on the 1 minute time frame. Last candle of the hour and the 15 minutes. Failed bear flag on the 1 minute. This is I was talking about. high went by, retracement and trend resumption. Stop losses at break even. This can definitely resume towards the downside as we saw yesterday. But we are still above the moving average. For that to happen, I need the price to come back within the range, give me some closes below the moving average, stay here for a while, then I'll be looking to go short as I wanted to before the market opened. This is what has been happening since the market is open. The first 5 minutes close above, close above. The bulls are not making, the bears are not making money. Stop order bulls made money. Stop order bulls made money. Limit order bears. If someone sold here, someone sold above this point, their break even is right around this point. This is the break even though. And also the high and buy on a smaller time frame leads to a pullback, then trend resumption. 1 minute till the hourly candle close. We after that our candle is closed. ATR expansion can be expected. We are retesting the hourly moving average. 30 minutes left to the regular trading hours on the hourly time frame. We are above 491. The new hour opened. We closed above the 491, which makes it more probable that we'll give a closing on the hourly time frame. We still have 30 minutes left to the hourly time frame on the regular trading hours. We are likely to close above the moving average. Coming back to the 5 minutes, now this is a high one on the 5 minutes time frame, and on the 1 minute we had a three-legged pullback. First leg, second leg, and the third leg. This is the start of the channel. That's a strong closing above. and a single standard deviation of this move is likely to put us back to the middle of this point. Let's see. Because this is the first 5 minutes candle of the 4 hours, the hourly, the 15 minutes. So it is unlikely that we are not going to. There's an 80% chance basically. We were going to take out the high and the low of this candle. 80 to 70%. That's a bad follow through on a 1 minute time frame. We've taken out the high of the 15 minutes, the previous 15 minutes. Can it be an expanding triangle? Yes, it can be. There is a risk. The problem with this is it can be an expanding triangle. That is the risk for the bulls. Bears want it to be an expanding triangle and break below the range of this triangle. Because the market stayed here for a very long time, so I would like to mark 515 level as important and relevant for now. Coming back to the 5 minutes, how many points do we have left till 101 risk to reward ratio? Like 3 or 7 points. An outside bar on the 5 minutes time frame, because the outside bar are very context dependent. If you do not get a good follow through, this can turn itself into a range. That's the risk for the bulls. Have we closed the gap on the hourly time frame? No, we have not. I am closing this trade, and the trade is also like closed. So we've got our 1 to 1 risk to reward ratio. That's a good follow through. First, like second. Limit order bulls, no, stop order bulls are making money. Uh, uh, this stop order market as for now and always in. We came always in about right around this point. This is the first breakout of the previous tight trading range. But for the overall context, we still are within the range. So this narrative we have was valid that we are in an expanding triangle. This can become like really violent until we reach somewhere around this point, 567. That would give us a second leg of this move. first leg, second leg, and this can be the third leg with a sideways price action for some time. Then we can retest this gap. We have also reached the full standard, one standard deviation of the initial range. That's nice. So this, I've gotten my one-to-one risk to reward ratio. For the swing trades, this was the whole standard deviation with 1 to 2 risk to reward ratio. I was not that bullish, so because of that reason, my lot size on this trade was 1/5 of the original position. So because we within the larger context are in this range, within this specific range, and this is a strong enough downward trend for a second leg. Plus, we have our previous day low and the relevant low, the Friday's low. So, all of that reasons, I did not push hard on my luck. So, my risk to reward was 1 to 1, which was really good. The trade was very clear and good. And so that's why I closed the whole position right at 1 to 1 risk to reward ratio. But in general, this was the 54 points range, and we have gotten 54 points. You see this two standard deviation of this initial range. That's why we are hesitant testing this point. Two standard deviation, one standard deviation of this move puts us back to the high of yesterday. We're about to test this gap. We're about to close this gap hourly. So now we have 12 minutes left till this hourly candle is going to close. Still, you have to keep this in mind that we are in this overall range of this Tuesday's candle, Tuesday 9 o'clock candle of the 4 hours. So we closed below. We are closing above. We'll probably give a closing above on the 4 hours above this point, which makes it an overall trading range for from the higher time frame context. First 15 minutes, the second 15 minutes. So this market is limit no stop order market. Stop order for the bulls. The bulls who bought around this point, putting their stop loss beneath this point, they got 1 to 1 risk to reward ratio. Someone bought around this point, putting their stop right below this point. They have gotten their 1 to 1 risk to reward ratio. We are above the Asian range. We move approximately one standard deviation below this range. We got a single standard deviation below this range. We can easily move single standard deviation above that will put us to this point. We're not closing, giving a close above the NVOG. Let's see on a 5 minutes. We have closed on the 5 minutes of on the NVOG, but not on 15 minutes. For reference, this is going to be white, solid white, and visual orders into backwards because this was the first day of the month. Tuesday was the first day of the month. So I'm going to mark this white for reference, and this was the high of the month on the regular trading hours. That makes it really important. We have not gotten a single strong closing below the previous low. Closed above, we closed above, we closed above, we closed above. Other than the sixth bar, which was not a strong closing. First of all, the second thing is sixth bar is usually allowed to do this sort of range expansion and closing below because it is a higher time frame close. So it's allowed to do that. Do bulls have a reason to get out of this trade? No, as of now, no, no. They do not have a reason to get out of this trade. Stop loss. Majority of the stop losses are at the 50% of the ninth bar or below the ninth bar. So if the price moves below this point, give me a closing below, or generally a closing below the moving average that would then make a good case for the bears. How far are we? We are 13 points less to this low, this high. We are going to close this gap now. Biju Bhavana, hi pro, view upside या downside BTC. Biju Bhavana, यार ये अभी ट्रेडिंग रेंज के अंदर है बिटकॉइन का। अगर तुम्हें देखना है तो बिटकॉइन की यार मैंने स्ट्रीम की थी हमारे उसके ऊपर। यार ये मैंने स्ट्रीम की थी बेसिकली इस दिन 27 जून को मैंने एक स्ट्रीम की थी 2-3 दिन पहले। उसके अंदर मैंने लॉन्ग टर्म सारा व्यू बताया, बहुत डिटेल में बताया, वो जाके देख लो। काफी डिटेल में मैंने ये सारा बताया कि ये ट्रेडिंग रेंज के अंदर है हम लोग अभी। जब तक इस ट्रेडिंग रेंज से बाहर हमें अच्छी क्लोजिंग नहीं मिल जाती तब तक शॉर्ट टर्म में रेंज है, लेकिन ओवरऑल लॉन्ग टर्म अगर होल्ड करो तो ये लॉन्ग टर्म अप ट्रेंड है। लॉन्ग टर्म अप ट्रेंड है, और अगर इस अप ट्रेंड का फिर मैंने एक और बाइंग जोन भी दिया था, ये वाला 105,058 और 103,053। फिलहाल तो ये ऊपर ही जा रहा है। और मैंने एक और भी चीज क्या बताई थी कि बिटकॉइन वॉलेटिलिटी इंडेक्स 27 को हम लोग इस जगह पे थे, 29 इस जगह मैंने कहा था ये हम लोग 129 के ऊपर जाएंगे तो हमें अच्छा मूव मिलेगा। सो अच्छा मूव आने लगा है, बहुत जल्दी आने लगा है। टेंशन नहीं लेना। So on Nasdaq, we have closed the gap. We have closed the gap. Do bulls have a reason to get out? No, they do not have a reason to get out. We are very much likely to test the opening of the month. Bulls do not have a reason to get out. First, this was the gap I was waiting for. We have tagged this gap. I have gotten out on 1 to 1 risk to reward ratio, but still, from the opening, bears never even got a single chance to make money. The bulls who bought above this point, putting their stop loss below this point, they got their 1 to 1 risk to reward ratio. The bulls who bought above this point, stop loss below this point, they also have gotten their 1 to 1 risk to reward ratio, right? Right around this point. Okay. So out of these 10 5 minutes bars, we only have about two bear bars. So it's very, 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 risky to take a short around this point. Please do not short this. In general, for reference, just keep this 5 minutes moving average. If you stay above this moving average, I would not short. Okay. So this is the opening of the month. We are likely to touch back to the open of the month and be careful with this sort of climactic bar because this can easily become a wedge and we can turn down. So just be careful. Okay. So see this on a 15 minutes. The bulls who bought right above this point got out. They got this one standard deviation and 1 to 1 risk to reward ratio. The first hour of the regular trading hours is closed. First hour closed. We are closed. We have closed above the moving average. That was very much probable after we got our closing on the hourly time frame on the electronic trading hours above 491. That made it a very high probability that we are going to close above the moving average on the regular trading hours, above the 20 period moving average on the hourly. Back to the 5 minutes. 5 minutes. God. This high was the first or the monthly high. Tuesday was the first day of the month. We are testing this wedge now, but still we can come to two standard deviation of the Asian range. That is still likely and very much possible if we keep getting this strong closing above. There is no reason for the bulls as for bears to short. They're just waiting for the price to get at certain levels which are logical and see how the price will react to those points. If we get a good reaction out of this point, for example, if the price comes to this level, moves below the previous candle low, give or move sideways for some bars, make a lower low. Or for that to initiate, it needs a closing below the previous candle's low. And we have never gotten that since the beginning of this session. Closing above, we closed above, we closed, 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 closed. So on the hourly, we are still doing the same thing. But is it a trending market on the higher time frame context? No. It's a range on the higher time frame context. Keep this candle in mind. So if you cannot see it properly, you can see it through this lens. See it now. That clear. See this candle, the low of this candle and the high of this candle. We are still chopping within this range. Let's come back to the 15 minutes. See how the price is reacting to this level. It's testing the open of the month plus this wedge and the previous week's high. So that this range, like 20 points range, this 20 points range till a single standard deviation of the Asian range is really important. So my objective of this streaming is complete. Basically, why I'm streaming this daily because I am keeping a journal, a video journal of my overall trading system. This is something which I have been testing for some time now. So I'm testing it and forward testing it while trading it live. So I can just see my mistakes where I'm making some mistakes, where the read is good. What are the days which I should remove out of my trading days and make my overall performance better? So Okay, guys, that is for the record. Uh-oh. I'm gonna close the stream now.